Robert Kyosaki is an entrepreneur, investor, and author worth nearly $100 million. It does not put money in your pocket. He uses debt to create wealth. This meant that there was no actual value or asset tied to the US dollar. Everything that goes in goes out. This means that you can divert your taxes that you should have paid through your corporations because the government got greedy and enjoyed the amount of money they were getting from taxes. I don't want to speak about Robert's history or upcoming, but more of how he prefers to invest and build wealth. Robert Kyosaki has written the well-known investing book called Rich Dad Poor Dad. I read this a while back and it changed my life for the better. It gave me an outlook on life and growing wealth that I had never considered before. So I thought that it would be only fair to spread his message on my platform. Welcome everyone to Don't Fear Finance. I have an important message to spread. For every one person who subscribes and likes this video, one more person is saved from financial stress and ruin. Please give back and subscribe and notifications on. If you want to know more about Robert Kyosaki, then comment what you want to see. Now, into the video. The first thing that is important to Robert is how you should know the difference between an asset and a liability. In definition, assets make you money while liabilities lose you money. Let's be specific because a lot of people mistake what an asset is or see it in the wrong light. Something like a house that you live in is not an asset. It does not put money in your pocket. You have payments each month, be it your mortgage, utility bills, anything that will lose you money. If you bought the same house but rented it out to people and made positive cash flow, then that would be considered an asset. The way Robert Kyosaki would define an asset is something that creates positive cash flow. The way that he lives is by making sure that his assets pay for whatever he wants to buy. That is a very smart way to live and do things. He will never have to worry about negative cash flow because that negative cash flow will be paid for by that positive cash flow that he earns from his assets. Let's confuse the less financially educated. He uses debt to create wealth. Wait. Debt? Wealth? That's funny. You can use a small amount of money for a down payment to buy an asset like real estate that you bought with the bank's money, which in this case would be debt. You can fix it up a bit and rent it out to people. This will generate you passive income as well as appreciation. After a few years, you could sell that property and buy another property that is worth more with the profits that you made. If you do this enough times, you can make millions off of a small down payment because of appreciation and passive income. This is what is defined as using good debt to create wealth. There is a bad debt, which a lot of people are in. Bad debt takes money out of your pocket. That's what a house that isn't creating cash flow is doing. It is producing a negative cash flow. Be careful when you're going into debt. This will either make you very rich or very financially destroyed. In every video I watched and every article I read on Robert Kyosaki, I found that he is opposed to having cash in your account. This is because in 1971, President Nixon took the US dollar off of the gold standard. This meant that there was no actual value or asset tied to the US dollar. This also meant that the banks could print more money over and over again with no care about the gold that was used to create the dollar's value. This is what causes inflation. Before 1971, you would get up to a 10% return on your money by putting it in a savings account. Now you could barely get one if you're lucky. The rest of the world followed that trend soon after. That means that the only way you can get true and long-term wealth out of your money is by exchanging that money for assets. There's this diagram that Robert Kyosaki shows in his book, Rich Dad Poor Dad. It has 4 quadrants. They are labeled income, expenses, assets, and liabilities. Whatever is losing you money is either a liability or an expense. This means that he would put such things like a car or a home that you only live in the liability category. Anything that you spend money on is categorized as an expense. On the other hand, if you bought things that produce you money, such as an investment in a business, a rental property, or maybe a stock, that would be categorized as an asset. Income is of course something that makes you money, like your full-time job, your side hustle, or a high-income skill. People who are financially stressed or are poor have one income stream. Everything that goes in goes out. The middle class is making enough to spend money on things that have a bit more luxury to them. They buy things that they believe are assets but are liabilities, such as a home, a car, etc. The wealthy know that they have to buy assets before they pay bills. They make sure that their assets pay for everything. The understanding of what Kyosaki talks about is super important in how you use your money, creating a better financial life for yourself. Something that I want to talk about before ending off the video is owning a corporation. This means that you can divert your tax taxes that you should have paid through your corporation, which will subsidize the amount of taxes you have to pay. The reason is because corporations were made to let the rich pay less tax. When taxes were first put in place, it was to punish the rich for being successful. As the years went on though, the rich found ways to deduct their taxes. The reason why over time everyone started paying taxes is because the government got greedy and enjoyed the amount of money they were getting from taxes. This is how corporations were invented. They were made so you could spend before you pay your taxes. This is not illegal or anything anyone should be mad about. Companies like Amazon and Apple use this to their advantage. You could open a personal corporation to do the exact same thing. Anyways, that's the video for today. Robert Kyosaki has some very different views to many people whom I've inspected. He leverages debt a lot more than other people like Dave Ramsey and Bill Gates. I have a lot of respect for Robert Kyosaki. He understands financial education and the system of getting very wealthy much more than other millionaires and maybe even billionaires. Anyways, I'm not going to go all fanboy in this video. If you want to see more inspection videos, then like and subscribe with notifications on and comment down below what you want to see next. Thanks again for watching, and I'll see you in the next video.